Good morning, this is Tom Aspray with a market wrap video for the week ending August 19th. Let's first look at some closing data for the futures. The futures closed at 42.2850 with a low of 42.20.75. Pretty much down sharply for the whole week. For the daily analysis, we're still long from 39.47. Hit all three upside targets. We'll look at a chart in a second. The 260 flipped back to negative on the 17th at 5:20 in the morning. Should be able to get short at 42.90 and 3/4. Hit two of the downside targets, 42.56 and change, 42.38. Stop here for now is 42.68.56. For the daily, the reversal level is 42.09.63. Let's first look at the daily chart. Pretty strong move up from that July 19th buy signal. You can see the high last week was 43.27.50, so we easily exceeded that third target. Pulling back down here, you can see that the dynamic stop in the daily this is the tightest it's been for a while. Volume picked up a little bit on Friday, but volume analysis is still positive. Stochastic confirmer has flipped back to bearish. The higher time frame, i.e. the weekly, is still positive. Looking at the 260-minute chart, you can see the dynamic close-only stop has really worked well. You can see where we went short on the 17th here. The dashed red lines are the stop. We kept hitting it on Thursday in those rallies, but it kept us in on the short side for the sharp drop on Friday. Everything is pretty much negative, though we are below the Stark bands here. You can see the 2 o'clock bar on Friday was well below the Stark band. So if we get a 260-minute close above that reversal level, 42.68.56, we'll be reversing to the long side. It was another profitable week, though of course past performance is no guarantee of future results. Our long position was stopped out from the prior week at 42.90.80 for that remaining position, 106 point profit rather, for a total for that trade of about 208. The short side took 34 3/4 and then 52 3/4 off, and of course are still technically on the short side. Let's look at some other charts, because there's quite a bit of conflicting data. This is a chart of the S&P cash index, the S&P 500, showing that, as many have noted, last week we came right up to this declining 200-day moving average, and then we turned lower, of course, at the end of the week. The 61.8% resistance is 43.67.19. Really need to close above that to confirm that this entire decline is over. If we look at the daily S&P 500 AD line here, it is turned down, still well above its rising moving average in green here and the breakout level. You can see some retracement levels. So from the low, 38.2% is 405.16, 50% 396.95, and 61.8 at 388.74. And currently this is still in a positive trend. Of course, the QQQ has hit a bit harder end of the week. You can see the advanced decline line has dropped below its moving average here. That's not typically a topping formation, but the next rally will be important. If we have a bounce early in the week and it fails to get back above that moving average, that would be a sign of weakness. We can see we've not made it yet into the 50% retracement resistance at 339. As for the QQQ, you can see this is the percentage of stocks above the 10-day moving average. Pretty good short-term indicator. You can see it was like 5 or something before the bottom. We've turned down from the 90 level. So typically I would look for it to sort of try to bottom out here around 10 to 15. which it should go happen early in the week. The short-term RSI is down in oversold territory too, but is not hooked up yet. So let's look at some other charts where the data is somewhat conflicting. This is a longer-term weekly chart of the New York Composite, and it's the AD line, the all AD line. You can see it moved above its moving average and its downtrend here. The downtrend it was lower at last week, but the moving average is rising. Typically, that's what we see when we see the end of a correction. You can see in 2020 after the COVID low, also in early 2019 after the debacle, the end of 2018. That's generally kind of what we see. The only instance in the last 7 or 8 years of where that has not worked out was in late 2015. It moved above its moving average here for a while towards the end of 2015, and then we saw one last drop before we saw a well-defined bottom in February. Let's look at some daily AD line analysis. You can see the 100-day moving average here is at 407.58, and the 20-day is at 415 and change. Once again, you see the AD line turn down. It's interesting to note here that based on stock charts data, the S&P 500 AD line did make a new high, all-time high, last week. That projects a new high in prices. So far, it's not been confirmed by either the stocks only or any of the other AD lines, both of which have turned down sharply. So with technical analysis, it's always, I think that this rally is still intact, but the next move to the upside will tell us. If this is a bear market rally that's failing, you would expect to see something like either what happened in March is most likely, in other words, a drop below the moving average, a rather weak bounce up. It'll take some time, normally a couple of weeks, and then it hits back down. So that's why we're watching the moving averages pretty conclusively. I'm looking at other data sources to confirm this one's a markets in and out. You can see once again the S&P 500, its AD line also shows a new high, and so I'll have more on that probably in the Forbes article I'll be writing this weekend. But rarely do you see all the data services give you that different a view. So I have a few to check yet, but stay tuned. It could be important. On the plus side, we did finally see a little spurt in the number of new highs on the NYSE, up to 125. That was above that previous peak. So that's encouraging. We still got a lot of work to do. If you could envision, this trend line has probably not been broken. Number of new lows has stayed low, so that's good. This is an oscillator I often refer to. It's the advances minus decline. In purple here we have a 5-day moving average of that differential. So when there are a lot more advances than declines, it gets like plus 1200, up to plus 1800 there. And when there's more declines in advance, it gets down into oversold. It's already at minus 745. So often we'll get in the minus 1400 to minus 1200. That could happen with another day of selling early this week. You can see another view of the NYSE and its all AD line. Made a pretty substantial high, fell just short of this peak, but still above support here. You can see at this support at the early June high. McClellan oscillator, started to diverge, but as I teach in the advanced decline line course, not necessarily that significant. Much stronger bottoming sign here, at the July low here, when the AD line formed a bullish divergence. I'd be happier if there are more bearish signs on Friday. You can see the put-call ratios are quite low. They picked up a little bit, but nice to see a move in the index put-call above 1.4, 1.5 early in the week. That would be a sign that there was too much bearishness on a short-term basis. That would fuel a rally. Other surprising, the sentiment has stayed quite low from the AAII, 33.9. I mean, that's more, even in bear market rallies, it normally gets higher than that. NAIM stalled a little bit at 64, but other data suggests that institutions are moving back into stocks. One survey a couple months ago showed that their exposure to tech was the lowest since 2006. That's pretty dramatic. Well, kind of a wrap-up chart here. Oftentimes I look at the intraday analysis, like an hourly chart, stock charts on a close-only basis. It gives you a little bit different outlook on things. So you can see we just kind of made it, into, a couple of support zones here, with a much stronger support zone, down in here. So a couple of different levels. So 318.85, we held above that. 315.92, 314.09, and then 307. So, and on the upside, then you kind of look at this shelf right in here, just above 330. If you can move back above that, that would be an encouraging sign. Volume did pick up in the last hour of trading on Friday, even though the markets were lower. Hi, this is Tom again. A lot has happened in the markets since the recording on Saturday for the Viper Daily Alert clients. You can see this is an hourly close-only chart of the QQQ we finished with. We broke that support. I've come down to the S2 here on a weekly basis, right around 314. So I think I was talking about the 314, 316 area. So we're trying to hold in there. So now the question becomes what kind of rally we see. Do we just see a weak rally up to 322, 325? The underside, remember, this was support, so it now becomes resistance, or do we get back above 326 before the end of the week? Volumes picked up a little bit this morning, which is an encouraging sign. You can see this is the NYSE composite. Want to focus in on the AD numbers, which are about better than 3 or 4 to 1 positive this morning. You can see the AD line is turned up here. So that's what we're watching on this rally. This was a pretty bullish move, so this drop really brought you right back into support, so it's still positive. Though we tightened some stops heading into Monday's ugly open and closed out some nice stock trades, 10-12% profits. We also found some things to buy. CAG, we went long on Monday, and it's acting pretty good today. It's up 0.75%. You can see the relative performance is positive. This means it's outperforming the S&P, and the OBV is also positive. So I'll be doing a wide open Zoom session in the next couple of weeks. If you're interested and you have questions, you can always email me at tom@viperreport, and I'll try to answer them when we have the session. Of course, if you're not invested and would like to start getting actionable advice on either ETFs or stocks, you can go to theviperreport.com and subscribe to either the Viper ETF, Viper Hot Stocks, just $34.95 a month, or if you're more aggressive and futures traders, you can look at the Daily Alert service. So thank you for tuning in. Hope you found this beneficial.